All right, Central Florida real estate investors, it's Alex Bogomil with Capital Fundings. We're in February, the beginning of February 2025. I want to share some of the stuff that we're seeing on our research end so you have an idea of what to look for and what to be aware of after you're going into your next investment property. Let's jump on and take a look. We use something called Altos Research, and we use it in every deal that we underwrite for our borrowers. And we're going to be embedding this onto our website so you guys have access to it, so you can use it as a free tool to help you be better educated and more knowledgeable about the Central Florida markets. So let's just jump in. I've already pulled up a graph. We're just going to look at Orange County today. A lot of the other markets track very similar, so we think this is a good set to look at. But let's just go through a few of the graphs, and I've already just kind of highlighted the past year. But what I really want to focus on is the last few months, October, December, all the way through February of 2025. And we're going to start our first graph at the median list price. So you can see the median list price for Orange County was at $595 on a 90-day moving average, and it's dropped all the way to $549. It's almost a difference of almost $50,000. So $50,000 on $595, it's a little less than 10%. And we're backing that up with our numbers too. We've seen about a 5% change in what our borrowers have sold their properties for compared to what we estimated they were worth. So we are seeing a slight price decrease in the Central Florida market, 5 to 10%. I've talked to a lot of wholesalers. They're seeing the same thing to confirm it. So it's real. The prices have dropped, and this is because of several factors. One, we all know the interest rates are hovering around 7% on the 30-year mortgage, which has affected new borrowers' ability to buy new properties. And the gap between sellers' interest rates that they hold on their existing mortgage and the 7% is very wide. So a lot of sellers are just uninterested in selling right now. But let's take a look at a couple of the other graphs too. We want to look at median days on market. And again, let's highlight the last few months. So you're going to see this graph going up. In Orange County, our 90-day moving average is 70 days. So if we went back to the beginning of the year, 42 days, December 2003, almost a year ago. So we've almost doubled 42 to 70. That's probably about a 75% increase. So it's a drastic increase. You need to take this into consideration when you're doing your next deal. What you thought was going to be something you could list and put on the market and expect it to be under contract that weekend now may take a month or two. Why? Because buyers have options. So they're going to look at several properties. Some of those are going to be renovated properties. They're going to have more to choose from. So it may take a little time before yours is off the market because you're competing against other properties. So what does that mean? It means you really want to make sure that you do a knockout job. You really want to make sure that you do a final walkthrough and you have a really good punch out list. So when that borrower does come through your property, they are 100% satisfied and know that, hey, this property was done well. You don't want the negative connotation of, oh, this was just lipstick flipper. You want it to be buttoned up really, really well. I highly recommend getting an inspector that will inspect the property after your renovations and then sharing that on MLS when you're listing it. So prospective buyers know that, hey, this property has been inspected and that they're not buying anything that's suspect quality. All right, let's jump to another couple graphs. This one's important. Price with property decrease. Again, if you look at the trends, and property decreases was really up in October. So prices really started dropping right here along the graph. And then now they're going down a little bit, the percentage of properties that are having the price decreases. But you'll see it's over 42, it's 45% on the 90-day moving average. And I just saw a webinar the other day. On average, it's 42% nationwide. So that's higher than a year ago. We're going into the season where sales should start picking up, but we're already at higher price decrease. What does that mean? Sellers are really motivated to sell their property. They're making price cuts. They're really trying to be the one the borrowers select on their property. So if you're looking at comps from a wholesaler or a retailer that's 6 months old, you may want to reconsider and only look at comps that are within a month or two, or make a 5 to 10% adjustment on those older comps to be more reflective of the current market. Let's see what other ones we've got that are good. Inventory, as we talked, I kept saying inventory is going up, up, up. Take a look at this curve. It's going all the way up. Don't worry about the number here. Let's just look at the trend. And then our median list price, we can kind of summarize. More properties are on the market. Interest rates are still high. Days on market is going to be a lot higher, and the median price is going to drop. It's simple supply and demand. There's less supply and more demand, which is going to lead to a decrease in prices. We hope this helps. If you like these graphs, check back with us in the next couple weeks. We're going to be embedding these on the Cap Fund website, so all of you guys have access to this research that we use in our underwriting, and you can get a really good idea of what zip code, what county, what city seems like a good investment. We hope you like this. If you've got any other real estate friends out there, please share this video with them. Like, subscribe if you haven't already, and thanks a lot, and we'll see you on the next loan.